did you? Anything you want.
We are proud to announce the 2019 Palisade Global Hard Asset Conference, taking place on Jekyll Island from May 16th to May 20th. Speakers confirmed include one of the most successful venture capital fund managers within the resource space, Marion Katusa, legendary mining investor Paul Matizek, former hedge fund manager Mike Alkin, and CEO at US Global Investors, Frank Holmes. All these guests, plus many more to be announced. Sign up now for more details and to be included in our special guest list. Join us in Jekyll Island and become part of a growing number of investors who are ready to take advantage of a coming resource boom. Welcome back to another episode of Palisade Radio. I'm your guest host, Karema Mutlu, and on today's show, we have the founder of the Morgan Report and a leading expert in the silver industry, David Morgan. Welcome back to the show, David.
Well, thanks for having me. Great to be back.
Let's begin by talking about the previous silver bull market back in the 70s. Do you believe that where we are today in terms of subdued price action and investor apathy towards the precious metals, and especially silver, matches what occurred in the mid-70s where prices fell and shook a lot of investors out of that bull market? Are we in a similar situation today? And is it even worth comparing the previous bull market with today's bull market?
Oh, well, you gave me a couple questions, and let me do the last one first. You know, is it fair to compare the last bull market of the 1970s to today's market? And the answer is yes and no, which of course is a crazy answer. Yes, from the standpoint of there's a real requirement, it's a must-have for basically all investors. Unfortunately, most investors aren't sophisticated enough to understand the absolute necessity of having a hedge position for their financial well-being. On the other part of it, the no is that back in the 70s, especially the beginning of the bull market, which I would say was basically, you know, there's no perfect stopwatch. It started exactly here, but it started in the early 70s. Remember, the coinage was 90% silver through 1964. So from 1965 onward, you could say that there was a bull market in silver because it separated from the monetary price, what was stamped on the coin, to what the value was. And the point I'm making is back then there were a lot of people that were aware of what happens when you go off an honest money standard. Of course, we've been off it from August 15th, 1971 with an international gold standard, but we've been off, quote unquote, a pseudo silver standard since 1965. So there were people that were in the financial markets at that time that knew the fundamental fact that this was a situation that always led to bad results over time. That really doesn't exist today. Now, there's people like you that listen to your show. There's people that follow me. There's a lot of others in the industry. But the amount of people that are really aware of the fundamental fact that when you go on a fiat-only system, it leads to dire results is just a modicum of people. There's just absolutely almost not worth talking about. So from that aspect, I'd say no.
Very good. So how is the silver market looking to you today? Do you feel we have reached some kind of bottom in terms of the price action? Apathy and despair are two words that come to mind when looking at the silver price over the last few years. What are your current thoughts?
Yes, I do think this is finally it. I mean, I get a lot of criticism. I've been wonderful at calling the top so far, and certainly I hope to get the last major top. But bottoms are a little tougher, and you need to come up off of a bottom. I mean, you know, I'm tired of saying this, but there was a spike low, which is typical for silver. 1813 was the spike, and 1813 sounds like a huge high price now relative to where we've been the last few years. But that was the spike low, and held that low for 14 consecutive months. So that was the low for 14 months, and then it broke down below that level. The point I'm trying to make is bottoms are very difficult because they can come in so many different forms. It can be, you know, meandering sideways. They can stair step down. They can V. They can go down really sharply and bounce right up, like what happened in the financial crisis. But based on sentiment and everything else, I still think that the actual bottom actually is behind us, which means December 2015 was the bottom in gold and silver as well. Barely. Silver's come down and almost tested that low, but it's still above that. So I do believe that we have, and sentiment-wise, definitely. I mean, there's been so many people. We had such poor eagle sales in both gold and silver last year in the U.S. Mint. There's every indicator you want to look at as far as sentiment is concerned is, I'm on to the cryptocurrencies. I'm, in the stock market. I, wish I'd never heard about the precious metals, and on it goes. I'd like to add one more thing onto that, and you alluded to it in the first question, and I didn't really pursue it. And that is, where are we as far as value investors are concerned? And believe it or not, when Warren Buffett bought 129.7 million ounces of fine silver, physical metal, in 1997, accumulated it through and took it and announced it in 1999, he was buying at around a little less than $5 an ounce average price. And that was the lowest inflation-adjusted price for silver in recorded history. And, of course, if you go to the Great Depression, you'll find that silver was 22 cents an ounce. So anyone that can't think and looks at nominal numbers, just a number, obviously would say, well, 22 cents is less than $5. But what you need to do is take the inflation lie out of the equation to get a level playing field and see what's really going on. So if you did that, what you would find, again, on a constant dollar basis or an inflation-adjusted basis, maybe the best way to state it, silver is cheaper at $5 when Buffett bought than it was during the Great Depression. Well, if you do that same math now, silver at the $15 level is actually as cheap or cheaper than it was at $5 when Buffett bought, because there's been such a massive increase in the amount of printed money. Now, the printed money has gone in the banking system and in the stock market. It hasn't really gone into Main Street. It really hasn't gone into the public's well-being. It's gone into increasing prices, especially, as I say, asset prices in the stock market. But nonetheless, the truth of the matter is we have a very low price in silver relative to the amount of money that's been printed.
Let's move on to the silver stocks and talk about the leverage associated with them, especially in the juniors. There's been some consolidation in the silver mining space, and perhaps an argument could be made to suggest that if the silver juniors that have survived this long and have kept going, then when silver does finally begin a bull run, these same silver juniors will react accordingly and provide increased leverage on your possible returns. What are your thoughts about this, David?
Well, you're correct. I mean, you need to be a good stock picker. If you just look at the, HUI or the XAU or even the GDL or GDXJ, I mean, some of these could give you some leverage. But if you could pick stocks correctly, you can get some extreme leverage. And, my favorite, Junior Explorer, doubled in price last year in this crappy market. And not only that, it came in with a tripling of its land package. Further to that, it's probably going to be, and I say probably going to be, forward-looking statement, I don't know for certain, one of the largest discoveries in the silver industry that we've had in probably the last decade or two. So that's, I'm saving that for my paid premium service. There's another one that is actually a twofold story, and this is one that's quite complicated, but basically it's urban mining. It has to do with a reactive agent that replaces cyanide, and this is something that my premium members are privy to, and the stock has done good and bad. I mean, if you were a member of the Morgan Report when it came out, your basis is around 35 cents. Stock's around 60 now, so you've got to double. If you're on our mastermind group, most were able to participate in the 25-cent financing, but the stock's been almost to $2. So it's fallen off, and a major investment bank bought in at $1.50. And usually when you get that kind of capital inflow from a major banker, that pretty much puts a floor on the stock. Well, it did not. So it's an opportunity that is one of the best I've seen in 40 years of being in the investment field. So I'm really happy that we have the opportunity. I'm a bit sad for people that, subscribed to me and bought it. My first price was don't pay over $1. And, we got some enthusiasm or whatever, and it went up through that and put a higher, not a target, but a higher buy level. But most people that study my work and understand how we speculate and just bet a little, win a lot, haven't gotten hurt. Some, stay in constant contact with the company, that type of thing. But so those are two in the junior space. And then, of course, if you go into the mid-tier, we were looking at Kirkland Lake all the way up, and people made, take a look at the Kirkland Lake chart and see what kind of money you could have made in 2018 with that company. So we're still, making money in this market. It's not everything we touch turns to gold, but certainly there are opportunities if you know where to look.
Very good. I understand, David, that another major market you have a lot of expertise in is in the energy market, particularly oil and gas. Are you bullish on these markets? And can you give us a sense as to why investors should perhaps take a look at these markets at this particular point?
Well, for years and years, a lot of my, subscribers, members, followers, whatever, would write and ask, I'm really sold on having precious metals, but where else should I invest? And of course, I'm very free market and open-minded. Real estate over the years has always been good, but you got to kind of time it right like anything. There's a time to be in gold and there's time not to. But I would say energy. I would always say, you should be in energy in one way, shape, or form. And so although I've looked at that market, there used to be what I consider to be a very good report on the energy space, particularly oil and gas. It was actually gold, oil, and gas. And a friend of mine, and he has left the industry, and there's kind of a void there. There are some oil and gas letters out there, but no one who's covered the full spectrum with all the new renewables, with solar and wind and wave energy and potentials with, hydrogen and helium and all this stuff that's out there. So I took it upon myself with my friends in the UK to start an energy report, which we have accomplished. And it launched just a couple of weeks ago. And the reason being is that nothing happens without energy. Energy is by far the most important commodity out there. And because we have a gap between the amount of energy that's going to be required on a global basis and the amount to be made up somehow, some way, which means a lot of these alternatives. If you look at nuclear, pro or con, and I know there's a lot of arguments both directions, nuclear is about 4% of the entire energy spectrum. It's not that huge as far as the amount that's produced overall. So there's a lot of space available. And these renewables, in most cases, are getting better and better. But there's a lot of caveats that people need to be made aware of before they make an investment. As I've often said lately, sometimes the best investment you've ever made is the one you did not make. In other words, you can take one of the energy metals, for example. There's one out there that's touted over and over and over again. And it's really portrayed inaccurately in almost every case by these ad copywriters. That particular mineral has about 400 years worth of availability on the planet. And yet if you read some of this ad copy, it's like we're running out. There's only, a thimbleful left. And if you don't get on this particular, newsletter, you're going to miss out. And the facts are, as I just said, there are 400 years worth of this available. So you got to be careful in this industry, and that's why I've taken upon myself to put out the kind of product I have with my partners in the UK to provide what we do. And anyone interested in finding out more can go to Coming Energy Boom. That's one word, comingenergyboom.com, and sign up for our free webinar and learn more about this space. It's very interesting, and I think one of the best places you can be over the next few years to invest.
Excellent. Okay, as we wrap up the show, David, is there anything else you wish to talk about or anything else on your mind for our listeners to listen to?
Well, you know me fairly well. I mean, I like to be a bit philosophical from time to time. And I just, investing is part of life. It's not everything. Don't let money control you. You want to control it and just balance your portfolio. We're in a time where we're seeing a shift. We're seeing a shift out of protect equities and maybe bonds eventually and into real assets again. And, enjoy life. I mean, investing is meant to enhance your life. It doesn't have to be an obsession, but it does need to be something that you constantly correct and continue. You can't just buy and hold forever. There is timing involved, and anyone that says, for the long run, usually doesn't really know what they're doing. I like the approach by Investors Business Daily's founder, William O'Neill, and he says basically all you need is about 6 stocks, and if you take more than that, you really don't know what you're doing. It doesn't have to be that few, but the general idea is most people overinvest. In other words, they're too diversified, or they think they're diversified when they really are not. So it's not really complicated. It's actually easier than most people think, but most people are not willing to get the kind of, let's say, coaching that they need to make good decisions. And it doesn't take a lot, but it does take some effort.
Excellent. Some very good advice there, David. Okay, well, thank you for being on the show once again, David, and we always appreciate your time.
Thank you. It was great to be with you.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen?